Hey everyone, how's it going? Welcome back to another good educational video about how to analyze any market from scratch. I've done 2 of these videos where I got really good feedback from you guys, and I'm making a 3rd one, specifically going to focus a little bit more on the lower time frame confirmation. Many of you guys asking me about what are some lower time frame confirmation that you always talk about that can confirm a setup, and I'm going to go into a little bit more detail today on specifically lower time frame as well. But I'll also refresh the memory of you guys on the first 2 videos as well, starting from the higher time frame once again. So higher time frame, remember, we're looking for a multi-time frame point of view top-down approach. We're identifying the impulse or the correction phases of the market condition, which gives you possible direction and bias. So remember, we're always going to look for a possible impulse and a possible correction, the latest one in that fact, to give you a better understanding where the market is going. So you can see here on the higher time frame, this is latest the impulse, and we fall into this descending channel. We know descending channel are usually going to be bullish reversal. In this case, we did develop into a descending channel that did play out to the upside. So before this upside move, our bias should be already looking for a potential upside move once it finished this descending channel. So now when we go down to the lower time frame, we're going to see this same higher time frame descending channel on the lower time frame, and you can go down to the lower time frame in any specific time frame. I found a lot of people tend to get this a little bit mixed understanding that it's not a specific time frame that you have to go to. It's anything that's really under the 4 hour, 2 hour, 1 hour, 30 minutes, 50 minutes, etc. I don't usually go down to anything 5 minutes or anything or 1 minute in that category. I usually stick to between that 2 hour, 1 hour, 30 minutes, 50 minutes. It's the best lower time frame ideal. Essentially, you're doing the same thing as what the higher time frame is doing. You're identifying the impulse and correction phases on the lower time frame, which can give you possible confirmation and entry. And every time when I talk about lower time frame confirmation, it tends to get a little bit mixed up between people. They're not too sure what I mean by lower time frame confirmation or what exactly that I'm looking for. And today I'm going to give you a little bit better example of it. So once we have a higher time frame bias, we're on the lower time frame now. We're going to identify the same impulse and correction phases on the lower time frame as well. So right away before this big up move that happened, before it, our bias, what is some positive confluence, positive bias that satisfy a bullish bias? So right away I'm able to see that there is a descending channel here, right? So descending channel will be your first bullish confluence. Remember, our higher time frame bias is looking for upside. So lower time frame, you're looking for the same kind of bullish price action that satisfy your higher time frame direction and bias as well. So descending channel is the first one you identify. The second one would be a double bottom here as well. So double bottom here. And third one is a inverse head and shoulder. You can see there's a inverse head and shoulder again. And then we do have a bullish impulse followed by this kind of a flag. It's part of this right shoulder of the inverse head and shoulder, but it's basically a different pattern as well. So you can see I managed to identify 4 lower time frame bullish confluence here in the making. Descending channel, double bottom here, inverse head and shoulder, and then we do have a bullish impulse followed by a consolidation here. So all that is really good bullish confirmation, and this is exactly what I meant when I say wait for confirmation before you set your entry, and this is exactly what we waited for. All that is going to be in your favor when you're looking for entry. And now, once you see that right shoulder and then that bullish flag develop, that is the last confirmation I need in order for me to place an entry order. And you can see price did indeed hit a desired target. And always make sure you're going to fit at least about 3-to-1 risk-reward ratio when you're looking for entries like these, because you want to make sure even if you take a loss, price is going to even if you take a loss here, but as long as you manage to catch one of these 3-to-1 trade, you can not only cover up your losses and then produce more profit as well. So always make sure your profit is at least 3-to-1 risk-reward ratio to your stop loss so that you can comfortably be consistent and sustainable in the long run. Okay, so that is an example of one trade that I'm looking for confirmation on the lower time frame. Now let's do a few more examples of this so that's easier for you guys to see. We're going to look at Euro Kiwi here, and I'm going to replay all this before the move has happened. So this is what we're seeing currently right now. So again, what do we do on a higher time frame? Identifying the impulse and corrective phases, right? So you can see this is probably the latest impulse that is more significant, and we're naturally going to identify a consolidation. And to me, this is the current consolidation, kind of an expanding structure after this bearish impulse down. So right away, to me, this is looking like it's possibly to continue more at this given moment. Okay, now we're going to go down to the lower time frame, and we're going to go down to the lower time frame to basically look for confirmation and entry. I'm going to identify a few different scenarios here that's going to satisfy our bearish bias. So remember, our higher time frame bias is bearish downside. So what do we do on the lower time frame? Well, lower time frame, now that we have that higher time frame correction or structure, our bias is looking for sell. So what do we do to confirm it? Well, we need to look for lower time frame confirmation price action structures and patterns. So what do we see here? Well, first I see a double top right? So double top, price is heading to this top and it's not continue to the upside after. It's basically reversing down. So right away, first confluence, double top. And what other confluence do we have? Well, we also have a head and shoulder pattern, you can see, right? There's a head and shoulder pattern here. So again, now we know that head and shoulder is a bearish reversal price action. And we also have this bullish impulse up, but no continuation to go further. Instead, it's a reversal impulse. So basically an impulse up, reversal impulse down, and then looking like there's a continuation correction. So basically a reversal impulse type of price action. So that is really the third confluence I can find. So usually you want to find at least 3 or more of a lower time frame confirmation that's going to be a positive confluence that satisfy your overall bias on a higher time frame. That's going to give you a higher probability of success. And all that left now is basically placing the entry order. If that's something that you do find it that fits your trading plan to enter, you would put the stop entry order here, and you will put the stop loss above the high of the correction, and you're looking for either first target here, or you're looking for a second target down to the previous low. So in this case, you can see when I talk about this forecast here, we have that double top here, we have the expanding structure, and we basically have a bearish reversal, and we're basically waiting for a continuation price action here. And indeed, exactly what happened. We completed that head and shoulder, we completed that reversal impulse, and price did impulse down to that desired target once again. So different example here, let's take a look at pound Aussie here. So pound Aussie, same thing, we did have this bearish move down, so we're going to replay before it happens. So we're going to look at the price again, identifying the impulse phase, identifying the corrective phase of the market condition. So if we zoom out here, we did have this really large impulse, and we did really have also a larger correction here. That's all fine, and that's actually enough for you to potentially expect or forecast this impulse and move to the downside. But now that this impulse and move has happened, you're going to use this as the latest impulse now, and you're going to identify a new consolidation, a new correction, a new correctional phase that's going to give you another possible bias, a possible direction of the market. So in this case, impulse down, correction, and then we have another impulse down and then another correction. So we know naturally we're going to expect another downside. So your bias or possible direction is looking for downside here. So now that we have that on the higher time frame, we're going to go down to the lower time frame once again. So when we go down to the lower time frame, we're going to replay this before it happens just to give you a better perspective. So we have that higher time frame bias is a bearish put down, and we also have a continuation price action here. We also have this continuation price action here. So we're going to look for lower time frame confirmation. So what are some lower time frame confirmation that we can see here in the market? So right away we see a double top here, right? This is a double top right here, and we also see this as a head. We also see this as an ascending channel here as well. And then within this ascending channel, you kind of also have this head and shoulder pattern as well, right? So that's already 3 confluence that satisfy your bearish point of view and your bearish bias on a higher time frame. So make sure you label these as well, right? What I do is generally I will label them in my, when I do a forecast, when I do analysis, you'll label them as a double top, you'll label the ascending channel, and you're possibly labeling this as a head and shoulder pattern as well. So all that being said, once the price commit, remember, this is why we wait for confirmation. If the price doesn't push down followed by consolidation, that just means that it's not developing to the right confirmation that I wanted to see, and I won't enter it, right? I'm not just going to enter here. I'm not just going to enter randomly. I'm going to enter when the confirmation are met. Right, so in this case, price did push down, and we did created this right shoulder of that head and shoulder to complete this, and you can see price did impulse down once again to the desired target, and it works out beautifully. So it's so important to have that higher time frame bias direction first, and then going down to the lower time frame and look for additional confirmation, additional price action structures and pattern that all satisfy your higher time frame bias and your higher time frame bearish point of view. So it's going to give you an overall higher probability setups in the long run. Okay, so what I want to do is Ethereum. Let's take a look at Ethereum just to show you a different market, different structure, a different point of view. It's all going to be the same. So starting from the higher time frame here, I'm just going to replay this to before kind of the move has happened. So around this area here, so around this time when the price kind of broke the high, right? When the price kind of broke the high already, so this is considered a potential double top, right? If the price doesn't continue onwards, this is potentially going to be a double top area. And we're going to first identify the impulse and identify the correction. While the price is moving up, but you can see there is a little bit more consolidation in my opinion. And I see this as a descending channel, a larger higher time frame descending channel, because we have that double top, and you can see price reach to that double top and basically no continuation to go higher. So that's what I see on the higher time frame. We also have this higher time frame kind of M style pattern. We know that's also possible to be a bearish reversal. So already on the higher time frame, our bias should be looking for a potential downside. Now we're going to go down to the lower time frame here, and let's just say we're on the lower time frame. We're going to identify a little bit more price action structures and pattern that you can physically see. So I see that there is a smaller ascending channel here in the making as well, and we did see a bearish impulse down, and we did see a bearish consolidation here, right? So that's already good enough confluence here that's developing to look for possible downside, to look for further continuation, because we also have patterns within pattern, structures within structure. Again, if you haven't checked out my video on patterns within pattern, structure within structure, make sure you tune into my workshop where you can find hours and hours of long, really good price action analysis, especially structure within structure if you're not familiar with this topic, or if you're not familiar with overall impulse and correction of how I do it. Make sure you tune into this video, which explains as many things as you can possibly learn in this workshop. So back to this. So now that we have confluence, now we have confirmation on the lower time frame, it's basically now just looking for if the price does commit to that downside move. Do we have any possible entries? Well, we sure do, right? We not only we form this consolidation, we push down, and then you can see there's many of these lower time frame continuation correction that's faking in the market. So all these are going to be valid entries as long as they fit your plan, because you have the higher time frame bias in your favor. You also have lower time frame confirmation that's also in your favor, and that's why these trades typically play out what they're supposed to, and they play out what they're necessary to push down. Okay, so to go back to recap everything once again, starting from the higher time frame. Remember, we're always starting from the higher time frame first, because the higher time frame is usually going to give you a better bias of what the market is possibly going to do. So start from the higher time frame, right? Whether that's daily or weekly, I usually go with daily chart, because we're going to do multi-time frame top-down approach. We're going to start from the higher time frame. We identify the impulse or the corrective phase of the market condition. In this case, we saw that as a descending channel. We know descending channel is usually going to be bullish reversal. So once you have all that, you know the higher time frame is possibly going to be bullish, so you have a possible direction and a bias in your head. And all that left is going down to the lower time frame. Again, lower time frame doesn't have to be any specific time frame. It can be any time frame as long as that's within 2 hour, 1 hour, 30 minutes, 15 minutes. I don't drop down anything less than 15 minutes. I found if you're on the 1 minute or 5 minute, it's a little bit too scalpy like. Price is a little bit irregular when you go down to a very low time frame. So stick to 2 and 1 hour, 30 or 15 minute chart is enough. And you're going to do the same thing is you're going to identify the impulse and corrective phase on the lower time frame, right? Because these are going to help you to lead to your possible confirmation entry. And basically, you're going to look at these lower time frame development. Remember earlier we talked about there are 4 confluence, right? I saw the descending channel, I saw the double bottom, so the inverse head and shoulder, I also see a bullish flag. All that's going to add confluence to your confirmation. So during your confirmation, find as many lower time frame price action and patterns that satisfy your higher time frame view, the more the better, right? Usually I will try to find 3 or more. The more that you can find, the more that it satisfies your higher time frame view, the better it is for your trade to play out, the better probability of this trade that will play out in your favor. And all that left is just basically forecasting the possible scenario that you want to see. If you want to see that bullish flag, you want to see that right shoulder, you just forecast what you want to see here. And if it does develop, set your entry order, right? Set your entry order, set your stop loss, and set a potential target, making sure it's always 3-to-1 or more risk reward. And in that case, you can comfortably always take these trades, even though if you might take some losses, but your profit is going to help you to cover up your losses and then produce more profit. So there it is, guys. That is the third video that I have made on this topic, how to analyze the market from scratch by using impulse and correction method. And this is the third one that focuses a little bit more on the lower time frame confirmation. So any question, comment, feedback, welcome to let me know, guys. And I will chat with you all next time. Thank you very much.